Welcome back. In Ivory Coast, a Eurobond there launched this month raised $1.25 billion in 16-year debt and 625 million euros in 8-year paper. The Prime Minister says the success of the operation bears witness to the confidence of international markets in the leadership of President Alassane Ouattara. The Eurobond had originally been planned at $1 billion. And to commodities now in South Africa, that country has raised the threshold of black ownership mining companies must meet to 30% from 26%, but has not decided if firms must retain that structure permanently. Unveiling details of a revised charter for the sector, which sets industry targets for black ownership and participation in mining, the mines minister said companies have 12 months to meet the new 30% target. The Chamber of Mines, which represents companies such as Anglo-American and Simbai Gold, did not take part in the launch because of what he said was a lack of consultation in drawing up the charter. And Ghana will probably start drawing from its stabilization fund to cover cocoa farmers' pay during the season that starts in October, as the second biggest grower props up local prices in the face of global slump. While Ivory Coast, the largest producer, has already slashed the price it pays farmers for the smaller of two annual crops by 36%, Ghana's Cocoa Board so far kept it unchanged, and it's ruling out any cuts for the upcoming main crop despite its own mounting debt. The country is hoping that demand in Asia and the Middle East will increase to boost international prices. Cocoa futures in New York have declined about 33% in the past year, as analysts predict a large global surplus for the season ending in September. And oil prices fell around 1% today after data showed a build in U.S. crude stocks, and OPEC reported a rise in its production despite its pledge to cut back on output. Brent crude futures were at $48.28 per barrel, down 44 cents from their last close. U.S. West Texas Intermediate crude futures were at $45.96 per barrel, down 50 cents. Crude prices have fallen by more than 10% since late May, pulled down by a supply glut that persists despite a move led by the Organization of the Petroleum Exporting Countries to cut production by almost 1.8 million barrels per day until the end of the first quarter of 2018. OPEC's own compliance with the cuts have been questioned, and the producer group said in a report this week that its output rose by 336,000 barrels per day in May to 32.14 million barrels. All right, let's talk more of the oil market with Desola Simone, research analyst with Financial Derivatives Company. Good afternoon, Desola. Thank you very much for joining us.
Good afternoon, Chimize. Thanks for having me.
Oil is at a 7-month low, $46 per barrel, despite OPEC's production cut extension. What's your take? Well,
like you rightly said, oil has declined to a 7-month low because of renewed concerns of an oversupplied market. We know that Libya's Shara oil field just came back on stream. Nigeria's Focados just came back on stream as well. We also know that rising production and crude stockpiles in the U.S., as well as increased gasoline stockpiles. This is summer. Usually around this time, there's a lot of driving around in the United States of America. So we expect that stockpiles should be lower, but the gasoline stockpiles came in higher than expected, which underscores another oversupplied market, and that's why we see the oil price come low today.
Now, you talked about oil output from Libya and, of course, Nigeria putting pressure on prices. With this development, do you see these two countries being included in the output cut by OPEC?
Okay, can I say that again?
Yeah, with this development, you talked about Libya and Nigeria outputs increasing and putting pressure on the oil prices. Now, with this development, do you see these two countries, Libya and Nigeria, being included in the output cuts eventually by OPEC?
And no, I don't think so, because these individual countries are not even near their production capacity yet. For instance, for Nigeria, the budget benchmark of production is 2.2 million barrels per day.
Yeah.
With forecasts coming on stream, is adding about 200 or 250,000 barrels per day, and that would bring Nigeria's production to about 1.6. So I don't think that that's enough reason for them to include Nigeria or Libya in the production cuts. Now,
looking at the just signed budget, the 2007 budget, the oil benchmark there is $44.5. What does oil at $46 per barrel mean for Nigeria now?
Oil at 46 has very, very significant implications for Nigeria. Let me just give you a little bit of background. In 2014, the budget benchmark was $77.5 per barrel, and the average price of oil in that year was $99. In 2015, it was $65, and the average was about $55. In 2016, the budget benchmark was $38, and the average oil price was $45. So we see that there's a little bit of headroom, for volatility. But with global oil prices at 46 and is likely to persist or even go lower, it reduces the headroom for Nigeria, and that has significant implications for our external reserves, the foreign exchange policy that the CBN is backing on, our revenue projections, and even our budget deficit. Now, if it continues at this level, or even if oil prices go lower, we may see our budget deficit increase. It may hinder the ability of the CBN to continue to intervene in the market. We also need to borrow more to fund our budget.
But do you see the prices continue this trend?
It is very likely, because U.S. production is quite resilient. It has been high, and now the top three largest producers in the world. Also, the stockpiles have been resilient as well. I mean, this week we expected a decline, but we are seeing an increase. So I think that new normal will be around $45 to $50 at least in the next couple of weeks.
All right, thank you very much for those details, or rather updates.
Thank you for having me.
Desola Simoni is a research analyst with Financial Derivatives Company here in Lagos. And it's on that note that we draw the curtain on today's edition of the program. Thank you very much for watching. I'm Chimezi Obi.